Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwagu. Today on the show, Sudan seeks foreign help on economy as protests rage. Uganda budget gap expected to narrow to 6%. And Libya's closed Sharara oil field losing 8,500 barrels per day to looting. But we'll start off the show with the markets, and here on the African continent, only the NSE index was in the red at intraday. South African JSE index was up 0.68%, Egypt up 0.63%, while Kenya closed in the red 0.39% on Wednesday. In the meantime, the markets in the Middle East were all in the green at intraday, with Qatar taking the lead up 0.68%. Abu Dhabi followed up 0.65%. Dubai and Saudi were up 0.22% and 0.33% each. And European markets fell after a revenue guidance cut from Apple added to fears of a slowdown in global economic growth. Well, let's get Paul to talk to us about this and more. Hello, Paul. Good afternoon.
Hey, good afternoon.
Now, Apple has surprised investors with a revenue warning, the first since it started selling iPhones in 2007. Now, CEO Tim Cook blames slow sales in China, whose economy has been hit by the U.S.-China trade conflict. But is that really all there is to it?
Well, a brand new iPhone in China is about 3 times as costly as a phone by a local competitor, let's say. And that's just too much for many Chinese consumer. A phone with over $1,000 price tag, that's just more than a lot of people can handle. And especially since it doesn't come with, big steps in innovation. Most of the new phones are pretty much the same as the old ones, and a lot of other phone brands can do the same tricks. Maybe the camera quality isn't quite as good, but people aren't really going to buy at these prices. It's the same situation in Europe, by the way, where a lot of people I know are not buying new iPhones. Instead, they're keeping their iPhones that they already have for a longer time. Now the average is not 2 years anymore, it's now 3 years that people keep their iPhones, just put some tape over it if there's a dent in it, and just keep soldiering on. Now this shouldn't really come as a surprise for Apple. However, it is a big step that the chief executive has acknowledged this drop in sales. But there were early signs, especially back in November. Some analysts actually called peak iPhone in several key markets. And Cook himself, Tim Cook, the CEO of Apple, himself said that the company had trouble selling phones in Brazil, in India, and in Russia, for example, although at the time he didn't count China in that list. It seems the company really has underestimated sales here. iPhone sales, however, are very, very important for Apple. It makes about 60% of its revenue by selling the iPhones, and it still does very good. The company is still in a very, very good position. But it does need iPhone sales to continue because even for its future business model, where it's hoping to sell more services to people, like from the App Store or Apple Payment, Apple Music, all that people need is an Apple device, an Apple phone to access these. So Apple wants to make sure people keep buying. It is now offering rebates and has lowered the price for some of these phones, but it's still refusing to say, hey, they were too expensive.
Oh, well, that's interesting. Anyway, let's look at an interesting story coming from Frankfurt, where you are. The former head of Deutsche Borse, where you're standing, is paying nearly 5 million euros to get charges on insider trading dropped. How is the market reacting to this news?
Yeah, the story has been developing for a while. It is a strange story. The former CEO of Deutsche Börse, Carsten Kengete, he's lost a lot in this. He's lost his job in 2017 when the probe came up, and it continued looking into this possible insider trading. Now he's paid a big price tag for keeping his criminal record clean. basically 4.5 million shares that he had invested. Now the charges were he did invest 4.5 million euros into Deutsche Börse, and that in itself isn't a problem. It was part of a bonus package that he had agreed upon with the company, but the timing was very, very bad. It was only 2 months before Deutsche Börse said that it was in merger talks with the London Stock Exchange, which would have eventually created Europe's largest stock exchange, but was then blocked by the EU regulators, citing competition concerns and fixed income. So that takeover fell through, and for a while it looked like Kengeta was going to get away with only paying 500,000 euros, but a local court rejected that, and saying that for his prominent position, really he was getting off too easy. So now this big hefty fine, although he does go out without criminal charges. It can't be seen as an admission of guilt, but it can be seen at least as an admission of some very bad timing. Since this story has been developing, the recent news didn't move share prices too much, but it's still a ding in Deutsche Börse.
Okay, let's look at the currency market. Flash crash has hit that market. What's happening there?
The crazy thing is that nobody really knows what happened there, which is one of the intriguing moments in the stock market world. So what we do know is that within 7 minutes of trading around 9:30 Sydney time, the yen managed to break through levels that it had held for almost a decade. It went up 8% compared to the Australian dollar and 10% to the Turkish lira. Why? Really nobody knows. Investors are still trying to figure that out. Some point to general risk aversion after the Apple news came out. Others say that Japanese investors, retail investors, were dropping loss-making shares. All of that combined with a very low trading volume and very low liquidity in Japan because there's still a public holiday going on. And that might have triggered this rise in the currency. The yen in the past 12 months has gained against all other currencies, really, and has been the only gainer on the dollar. But in this particular instance, we still don't know what happened exactly.
I thank you very much for your time, Paul, and enjoy the rest of the day.